Hello everyone! Today I'm ranking and putting into a tier list common investment options. Now I'm going to be generalizing a very complex and broad topic, so I'll have to set the context properly. When making this list, I had in mind the average millennials. So this would be your students who are about to graduate university and about to join the workforce, as well as yuppies, young professionals who are a few years into their careers. What we're also talking about here is the average transaction. What is it like for everyone? Now, of course, everything here done right and with the right amount of luck will yield to outperformance, but what does it really look like to the typical investor? I'm going to be using 5 criteria to evaluate these investment options. The first one being the earning potential. How fast and how much of a return are we expecting? Number 2, which isn't as talked about but goes hand in hand with the first one, is the amount of risk you are accepting whenever you sign up for a particular investment opportunity. How much of your initial investment are you risking to lose? Number 3 is barrier to entry. How easy is the investment outlet to be understood, especially if you are someone who doesn't know a single thing about it? And also, how easy is it to sign up for? Do you have to go to a particular office, or can you just stay at home and sign up online? Number 4 is resource intensiveness. How much time of the day are you going to need to be able to do this successfully? Do you have to spend 1 hour, 2 hours of your day looking at your portfolio and managing it? Or is it something that you can just buy one time and then just wait a few years and then collect your returns? And number 5 is a bit similar. It's the convenience factor. How easy is it to manage this particular investment? How easy is it to withdraw from your investment? Do you have to call someone over landline? Do you have to email someone? Do you have to go to an office? Or can you just go through an app in your phone and just click a few things, and then you'll be able to manage and, if need be, withdraw from your investments? When I thought of this video concept, I thought to add this item as a bonus one, but I thought, hey, this is actually the most important one, so let's put it at first. And that would be investing in yourself or in a knowledge or a particular skill. And without rambling on too much, I will give it this score and give it a top tier rank of SS or double S. Let's start with the most tangible, which is real estate. I've subcategorized this into 3, with the first one including lots, residential and farm lots, as well as those with houses built in them. I think this is a pretty good and solid investment outlet, but in terms of return, this pretty much just preserves your capital. Now, of course, if you are investing in an area which is being developed, then that will have a chance to outperform, but probably you will be waiting a lot of years before you are able to reap the reward. In terms of risk, land banking isn't really very risky because land is land. There's a limited resource of land, and I don't really see anyone selling land at a price lower than they had acquired it unless, there's an emergency. In terms of barrier to entry, I would give this a lower score, mainly because you would need a lot of capital researching for investment opportunities and prices in the real estate. It's not as easy. Residential deals, unlike in the US, aren't publicly available here in the Philippines. Of course, you can benchmark against those listed in Facebook Marketplace and Carousel, but I find that it's not really that accurate. You would still have to go out and really ask the residents of that area how much is the going rate. It's also not as easy to purchase real estate. You would really have to go out and meet a person. In terms of resource intensiveness, I would also give this a median score. The good thing about real estate is once you purchased it, all you have to really do is wait. That's it. You don't have to do anything. That's why it's actually called a parking facility. In terms of convenience factor, unless you have a broker of your own, then it's not that convenient because, again, everything is still paper-based. There's no app for you to manage your real estate development. And also, there's no ready resource for you to know how much actually is the market value of your real estate. So for this, I'm going to give this particular category a rank of A. Number 2 subcategory is condos. Condos, I think, are the most popular real estate investments for millennials as well as OFWs. I myself am paying for 2 condos, one in Pasig and the other one in QC. But in terms of earning potential, I don't think it's that great. So I've been asking around and also been doing my research, and my goal really is, once the condos have been turned over, is to have the rent there pay for the amortization. And so far my calculations is still off. Well, that's okay. I just convinced myself that even if it's not enough to pay for the entire amortization, then I could just add on to that, and then eventually I would have my own place to stay in. But of course, the ideal scenario is for the entire rent to pay for the bank amortization. I think there's an oversupply, honestly, of condos, and also with what has happened in the world, there's a bit sort of exodus. The main business districts are being decongested. The growth here might slow down. Generally, I think condos are overpriced. I mean, you're going to pay for 5 to 6 million for a 1-bedroom, 2-bedroom. That's already like a mansion in the province. The reason why I actually invested in a condo is I had no choice. I can't really buy a lot here in Metro Manila, and I'm not from here. I'm from the province. So I thought to myself, why would I still go to Cavite or Antipolo? I don't know anyone there. So I might as well just bite the bullet and stay here in Metro Manila. And then anyway, we have our house in the province. But if you are someone who is, from the vicinity within Metro Manila, probably like Marikina or Antipolo or Cavite, then you could still opt for land there. I'm looking at the lots there, which are the same price as the condo I bought, and I'm thinking, this is like a whole lot, house and lot already, and I only had a condo. In terms of risk, this would have the same risks as the first subcategory we discussed, but in terms of barrier to entry, I think this would be a little simpler because there are a lot of condo sales agents out there who are just ready to assist you. And also, condo prices are really just posted online, and those who are reselling their condos would have their prices set online. Since it's a bit more competitive, the prices listed are a bit more accurate because it's also benchmarked against the developer set prices. Barrier to entry is a bit similar. Of course, you would also need a larger capital or like a larger down payment. In terms of resource intensiveness, pretty similar, but again, all you have to really do here is look for the particular condo, and then once it's there, you'll just have to pay and pay and pay and then wait for the condo. Now, if you are looking for it as a rental outlet, then of course that will have more work once it's been turned over to you. But if it's like a buy and sell situation, then that should be a bit easier. In terms of convenience, it's not that convenient. I mean, I have an online portal which I look at just to check if the payments I've been doing every month goes through, but other than that, everything that you have to go do, you'll have to go to their office, you'll have to talk to someone or call someone. It's not as easy as clicking a few buttons in your phone. So because of this, I'm giving condos a grade of B. The third subcategory is foreclosed properties. These are properties which have been repossessed by the bank, so they're reselling it for a particular price. I think if done right, investing in foreclosed properties can give you more of an edge in terms of earning potential because, of course, banks would want to offload these assets. In terms of risk, there's also a bigger risk to it because, there are a lot of things that you would have to clarify before you actually purchase a foreclosed property because simply someone has already lived there. In terms of barrier to entry, this would also be similar to other real estate. You would need a larger capital. The institutions which are selling these foreclosed properties would help you in purchasing them, but still there's a lot of paperwork involved when investing in them. There's also a lot of research that comes with investigating a particular foreclosed property to check if it's being sold at a discount. Other than that, you would also probably have to spend time in renovating the place because, again, someone has lived there and you would want that to be not as obvious. In terms of convenience, it's not that convenient, again, because you would have to sign a lot of papers and talk to contractors and lawyers or notary. So investing in foreclosed properties take a lot of work, but if done right, I think it could yield you a good return. So I'm giving it a rank of S. There is actually a fourth category, and this would be commercial lots or commercial properties or even apartment complex. And this is a goal of mine, hopefully in the future. I think this is very similar in investing in foreclosed property. You would really have to put the investment mindset, investment hat. The only difference is this would take more capital. So in terms of earning potential, there's probably a little bit more, but in terms of risk, there's also a little bit more. In terms of resource intensiveness, it would also entail more because there's also a whole new regulation set when it comes to dealing with commercial properties. When it comes to convenience factor, I don't think it's very convenient at all, especially when you are just starting up. Probably if you're a few years into managing your commercial property, it will be easier. But when you are just starting out, it would be like a business which you are also propping up, and it will take a lot of grinding for you to set it up properly. For these reasons, I am going to give commercial properties or apartment complex a rank of S. I've actually already alluded to the second type of investments that we are going to talk about, and this is business. So I would think that condos, foreclosed properties, and commercial properties would be similar to running a business. Setting up your own business would really have a very good earning potential simply because you are setting your own prices. Now, would people be buying from you? That's another question. In terms of risk, a business would also have a very high amount of risk attached to it. But this is something that you can manage on your end. So in terms of barrier to entry, of course, this would depend on the type of business which you are starting. So I'll just give it a median score. In terms of resource intensiveness, now this is something that you will have to understand and commit to. Starting your own business is not going to be easy. Are you tired of doing OTs? Try starting your own business, then you would have to be turned on most probably 24/7. In terms of convenience factor, it's also going to be very similar. It's probably not going to be very convenient at all. Especially at the start, you are probably doing everything on your own. There's also a high chance that you are probably still studying or still working, so you would have to juggle and balance those two aspects as well. I'm going to give starting your own business a top tier ranking of S+ because I think it's very rewarding to start and succeed in your own business. The main drawback is the resource intensiveness aspect of it. But if you are able to overcome this, I think it's really very rewarding. The next investment outlet is crowdfunding or angel investing. This is for people who would want to own a more tangible business but really don't have the time or capacity to start their own. Of course, you wouldn't earn as much as you would had you started the business by yourself. But the good thing about angel investing or crowdfunding is that you have someone else managing the business for you. In terms of convenience, I think it's a bit more convenient to start, especially since there's a lot of platform that caters to angel investing and crowdfunding these days. I think there's also a considerable risk, especially when it comes to crowdfunding, simply because it's a very new concept. And I'm not even sure if it's really clearly covered by the current laws that we have. Initial investment capital would depend on the setup that you are going for, but typically I've seen even for as low as 20,000 to 50,000, 100,000 pesos, you could already be a co-investor in a business. In terms of convenience factor, I don't think it's that convenient yet. I've had an experience in angel investing in a cafe, and whenever I have to ask about the current financials, I had to email someone and they had to email me back manually. So it's not that instant. For this, I'm going to give angel investing a score of A-. The next outlet we're going to discuss is direct bonds investing. So bonds are basically debt instruments. So utang, these are debts of government if they would want to say build a new infrastructure, a bridge or a new tollway, or of corporations. Say if a corporation would want to open up a new mall or a new venture, then they would have an option to issue bonds for them to gain capital for that new venture. In terms of earning potential and risk, bonds would tend to be generally classified as having more moderate earning potential but also more moderate risks, especially when compared against stocks. I think it's fairly easy now for the average millennial to buy a bond on their own. Upcoming issuance are generally announced online, and then once it's ready for purchase, you can just go to your bank and ask for it, and then you would have to fill out an application form, and then that's it. You'll be able to buy the bond that you want. This is actually what I did when I bought my bond a few years ago. I think bond rates now are actually a bit low. There's a lot of buzz around Premio bonds, but I think it's a very low interest rate. But if you are someone who is interested in that, then please, by all means. I was able to buy a bond a few years ago, and I think the return on that was around 5 to 6%. And the principal for that is about to be released by June next year. In the past, typical bond initial subscription prices I've seen was around 50,000 pesos. But now, for as low as 5,000 pesos, you could already own a Premio bond. I think it has a very good point on resource intensiveness. A lot of the information you would need is probably available online. And all you have to do is really decide for yourself whether the bond issuer is a trustworthy creditor. Is this someone who is not going to default on their loan? For the bond I have, they release quarterly coupons, and it's already directly credited to my bank account. They also release quarterly statement of accounts, which I just received in the mail. It's pretty easy to manage. And because of this, I'm going to give bonds a top tier score of S. The next outlet we have is cooperatives, and I love cooperatives. I think they're very similar to either a bond or a bond fund, but the thing is they would usually have a lower minimum initial investment requirements. It would depend from one cooperative to another, but generally how it works is the cooperative will have a loan structure for their members, and then those who are availing of the loan would have to pay interest, and part of the interest which is paid is redistributed to everyone who is invested in the cooperative. Aside from this, most cooperatives would also have their own main business. The cooperative I'm with now is actually the provider of the food in our pantry in the office. So the good thing about this is you would also have certain perks when you are a member. So whenever I buy food from our office pantry, I also get a rebate from the purchases I make. In terms of returns, at least for the cooperative I'm with, I really like the returns that they have posted in the past. It's very comparable to a very good bond, averaging at around 6 to 8% per annum. It's also very convenient for me to invest in that cooperative because it's tied up with the company I'm with. So every month, it's just through salary deduction. My cooperative also shares statement of accounts every so often. I think just once a year, but it's okay for me because I don't really like to be reminded of my investments in the cooperative. When it comes to redemptions, it's fairly simple. I would just have to email the HR in our company if I want to redeem, and then they would already directly credit it to my bank account. Everything was paper-based when I signed up for that cooperative, and I suspect that most cooperatives would also still have the paper-based systems. With this, I'm giving cooperatives a tier score of S. The next outlet is stocks. So stocks are equities or ownerships in a particular company. But if you find that too technical, it basically means that you are a kasosyo of these big corporations. It's very similar to angel investing, but with a more formal setup. The way you can earn from stocks is through capital appreciation or through earning of dividends. We can discuss this more in detail in another video. In terms of earning potentials, stocks would tend to outperform all other asset classes, especially over the long term, but it is more volatile in the short term. There's a difference when it comes to stock investing and trading. So trading is more of speculating, and I don't really classify it as investing, but right now it's really very popular and there's a particular market for that. Stocks would tend to be more volatile, especially in the short term, so it's really not for short-term investors. So with the advent of online brokers, it has been democratized so much that for as low as 5,000 to 10,000 pesos, you can already invest in a particular stock. It's also very easy to monitor. You can actually see the real-time market value of your stock investment from your app or from your computer. In terms of research intensiveness, if you really want to research on a particular stock, then it would take a toll on you because there's a lot of material which is available and you would have to go through it one by one. Personally, I don't think it's really that worth it to spend a whole lot of time researching into stocks, especially if you are just investing a very small amount. With this, we're also giving stocks a rank of S. The next investment outlet which we are going to discuss is high interest savings accounts, and they usually come in the form of digital banks. So this would be your CIMBs, INGs, GSaves, and they are very popular right now. In terms of return, of course, it would be more sober because they are still savings accounts, and a lot of them have 4% promos right now. So that would net you a return of 3.2%. I expect that after some time, these promo interest rates would actually go down, maybe up to 2 to 2.5%. In terms of risk, it's also very low risk. The good thing about them is if you are putting in within 500,000, they are PDIC insured. They have a very low initial investment or initial savings account rate. I think for as low as 100 pesos or even 1 peso, you can already open an account with them. And it's also very convenient because all you need is their app or to sign up online, and then you would have that account. I really like high interest savings accounts, and I initially gave it a top tier rank of SS. But when I thought about it, I don't think they're really an investment outlet. It's more of a very good savings outlet. So in terms of savings outlet, it's a double S. But in terms of investments, I don't think you would want to put your money here for the long term because it's really just for capital preservation, maybe an outlet where you could place your emergency funds. So as an investment outlet, I'll give it an A. Let's tackle the next two very quickly. It's very similar to high interest savings accounts, and it would be time deposits and long-term negotiable certificate of deposits or LTNCDs. Now, I think time deposits is very popular with our parents, but I think it's very outdated now, especially since we have these newer instruments. I also don't really like the lock-in aspect, especially since you don't really want to lock in something for a very long time with those interest rates. I mean, high interest savings accounts are good for emergency funds, so why would you lock in your emergency fund? They don't even earn that much. With this, I'm giving time deposits a score of B. Now, the next one, the LTNCDs, would usually have a higher interest rate but would also require a higher capital. They're very similar to the last two we discussed. They're also PDIC insured, and simply because of the higher interest rate, I'm giving it a better score of B plus or maybe A minus. Now, let's get into pooled funds. This would be your mutual funds, your UITFs, your ETFs, and even Pera. Very quickly, how this works is it pulls funds from different investors, give it to a fund manager for them to manage, and then the returns, it would be redistributed depending on the investor's share of the fund. I've also subdivided this into 5 categories, basing mainly on the type of assets they invest in. The first pooled fund we're going to discuss is very similar to high interest savings account, and it's also the most conservative type of mutual fund, and they're called money market funds. Now, I really like money market funds because again, it's very conservative. Most money market funds would have a mandate for the fund never to have a down day. It would rather maintain its market value than risk losing money trying to grow. Money market funds are a good capital preservation tool, and it's a good outlet to put your retirement pay as well as your emergency funds. These days, it's also very convenient to sign up for a money market fund online, and the minimum initial investment would range from 100 pesos to 1,000 pesos. It's also very easy to manage. Most asset management companies would have an app or an online platform where you can look at the current value of your investments. Money market funds are one of my favorite mutual funds, and I really wanted to give this a double S rank as well, but it's not really an investment tool per se, but more of a capital preservation tool as well as a savings tool. So for that, I'm going to give it a score of A. The next type of fund we're going to discuss is bond fund, and of course it invests in bonds. In terms of minimum initial investment, ease of application, as well as resource intensiveness, all of the mutual funds here would have a very similar situation. So let's focus on the earning potential as well as the risk. As mentioned, bonds would have a lower risk attached to it when compared against equities, and bond funds and equity funds would follow a similar pattern. While bond funds would generally have a lower initial investment requirement, personally, I would just invest directly in bonds since these types of assets would have a medium horizon anyways. When investing in bond funds, of course, part of your capital is paid as management fee to the fund manager, and of course, that would affect your overall returns. With this, I'm giving bond funds a score of A. Let's talk about equity funds. Of course, These funds invest in stock and they are actively managed, meaning fund managers would have free reign on which type of funds they invest in. Because these funds would tend to have higher management fees, it typically hits the overall return of the fund. So because of this, I'm going to give it a score of B. The next fund I'm going to discuss is called index funds, and it's very similar to equity funds. The only difference is it's a passively managed fund and it only tracks a particular index. For our case, it probably will be the Philippine Stock Exchange Index. I really like index funds and I think it's perfect for young professionals or those just starting their own work because it's very easy to track and manage. You don't even have to open your app to know how your fund is doing. All you have to do is turn on the TV or Google the PSEI, and then if it's down, then you would know that your fund is down, and if it's up, then you would know that your fund is also up. Another good thing about index fund is since it's passively managed, then it would tend to charge a lower fee over equity funds. This lower fee structure produces more favorable returns for the fund, especially over the long term. And with this, I'm going to give it a very high tier of SS or SS. The next type of funds is called balance fund, and they would invest both in bonds and equities and try to shift based on the current market whether to invest more in bonds or in equities. Very similar to equity funds, I find that balance funds would have higher management fees and it tends to hit the overall returns of the fund, so I would also be giving it a B rank. The next outlet is VULs or variable unit linked insurances. Now this works very similar to pooled funds, but in reality it's an insurance with an investment component. I'm putting it here because it tends to be sold as investment outlets, but in reality, it's not. Again, it's an insurance with an investment component. VULs are convenience products because it combines insurance as well as investments. But of course, it would also entail a convenience fee, which comes in the form of higher management fees. One aspect I don't like about VULs is that you don't really know how much of your premium goes into the fund. So you don't really have a good gauge of how your investment is performing. I don't think VULs are the devil. I have a VUL myself and it serves a particular market. However, if you are someone who is looking to maximize your money, it's not a very optimal product to start with. Besides, it's really not an investment product to begin with, so I'm giving it a score of C. The next outlets we're going to discuss is government-sponsored investments. And these are your MP2s as well as SSS Peso Fund. Now, I have my MP2 and in terms of return, I think it has given a generally good return over the last years. I don't know about this year with what's going on with the world right now, but I think it's a generally good return. In terms of risk, it is a government-sponsored fund, so there's lower risk when it comes to that aspect. It also has a very low initial investment. I think my MP2 was only 500 pesos when I started. So it's very good that, you know, it's more accessible for everyone. My personal experience when signing up for the MP2 is I had to go to the branch. There was also a very long line, so I don't think it's that convenient. But the good thing about it is you can sign up for their online portal where you can view it. And then for your subsequent investments, you can use tools like GCash or even their own portal to add on to your investment. Now, what I don't like about it though is there's a fee attached to adding to your investment. So I don't know. I don't really like that extra fee. Now, I haven't tried redeeming my MP2, but I don't know the process, but I hope that it's easy and you can just have it credited to your bank account. One thing I don't like about MP2 is the lock-in period. I think you will have to lock in your investment for 5 years, and for that particular rate of return, I think it's a bit low, so I'm going to give it a score of A. The second one is the SSS Peso Fund. I personally don't have an SSS Peso Fund, but I've been looking at their prospectus. I think the return is a bit low. I suspect it's very similar to the MP2, wherein you will have to go to an SSS branch and fill out a form. SSS would also have their own online portal, so hopefully you're able to view it there. Returns-wise, I don't think it's that worth it, so I'm going to give it a score of around B+ to A-. The next outlets which I'm going to discuss is Forex or Foreign foreign currency exchange and cryptocurrencies. Now, honestly, I don't think these are investment options. These are more of like a speculative product. When it comes to return, they would have a higher return, especially on a shorter time, mainly because you are trading these numbers. But when it comes to risk, it would also have a very high risk attached to them. You can lose a very large amount of your capital within minutes or even seconds. When it comes to initial investment requirements, I think it's also democratized now. For as low as 1,000 to 10,000 pesos, you could already start. When it comes to resource intensiveness, I think you'd really have to put in a lot of time to do this correctly. You would have to research on it if you would want to do it correctly, because otherwise then you're just throwing away your money. In terms of convenience, I think it's also very convenient to do this. Everything is available online. I've been researching on it myself, and one thing I found interesting is that some setup would require you to have an external device like a USB for you to save the cryptocurrencies. There's really a lot of research that you would have to do to be able to get into this. And strictly speaking, I don't think it's an investment outlet. It's more of a speculative instrument, especially for millennials and young professionals. For this reason, I'm going to give it an investment tier score of C. I think this has been a very long video, and I've been trying to film this for a few days now. If you are interested in more personal finance, self-development, and investing videos, don't forget to subscribe to the channel and like this video. Please also comment because it helps me out a lot. That's it. Bye!